The dollar downfall begins not with one giant crash, not with one dramatic headline, not with the whole world dumping the dollars overnight. It begins with cracks. The Middle East is on fire. Oil has surged. The Strait of Hormuz, which handles about a fifth of global oil and gas trade, has been severely disrupted. America is sitting on nearly $39 trillion in debt, and one of the old pillars behind dollar dominance, the petrodollar system, no longer looks as untouchable as it once did. I'm not saying that the dollar dies tomorrow, but I am saying that the dollar decline is underway. And the truth is this: holding too much wealth in cash and dollars is not safe. It is exposure. A lot of people still think cash is the safest place to hide. That is only half true. Cash is useful for bills, emergencies, flexibility, and short-term survival. But too many people take the truth and turn it into a false sense of security. But the real question is not how many dollars sit in your account. The real question is what will be the purchasing power of those dollars later. The war has already pushed oil prices higher. Energy is more expensive. Transport costs rise. If transportation costs rise, the production costs rise. Prices rise across the whole system. So yes, the number in your bank account may stay the same. But if that money buys less food, less fuel, less housing, and less life, then what exactly are you protecting? A number? Because it is clearly not your purchasing power. And this is exactly why the war matters. Not because of missiles, not because of headlines, because energy sits underneath modern life. Transport, food, factories, shipping, chemicals, almost everything. When oil jumps, everything gets uglier. This is not just a geopolitical story, it is a money story. It is an inflation story. And this is why people saying,
I will just sit in cash and wait,
are missing the point. Wait for what? Wait for inflation to chew through your money while you call yourself safe? This is not caution, this is passive destruction. So now add debt. America is sitting on nearly $39 trillion in debt. That does not prove collapse is happening tomorrow, but it does prove that the system is heavily dependent on borrowing, refinancing, and confidence. And when debt gets large, the margin for error gets thin. Then add war, add oil shocks, add inflation, add global instability. You do not get resilience, you get a stress system pretending to look strong. And that kind of system people trust until it embarrasses them. Here is where the dumbest argument shows up. People say,
the dollar is still dominant, so it must be safe.
wrong. Dominant does not mean safe and untouchable. And being dominant definitely does not mean your purchasing power is protected. The dollar can stay on top and still become the worst place to park long-term wealth. And war makes that problem worse because war does not just push the oil prices higher, war stress tests the entire dollar system. It tests deficit, inflation, confidence, and alliances. And it tests the petrodollar structure that helped support dollar demand for decades. Media outlets report the Gulf oil that is flowing towards Asia is already happening outside the dollar. That war is shaking the foundation of the old petrodollar system. And here is the biggest risk. If this war pushes major oil and gas trade into other currencies, that is the serious blow to the dollar. Not because the dollar disappears overnight, but because once the world no longer needs as many dollars to buy energy, it means one of the biggest pillars of the dollar dominance falls. And one more thing matters here: speed. Because even if this decline starts slow, it may not stay slow. How fast it gets worse may depend on how many mistakes the US makes from here on debt, inflation, policy, war, and geopolitics. Because slow erosion can turn nasty when bad decisions keep piling up. History shows countries keep learning the hard way. Dominant powers do not collapse out of nowhere. They weaken first, debt rises, commitments expand, confidence slips, and war exposes the weakness that was already there. That is how powerful systems start to rot. And most empires do not notice early. They notice after the damage is obvious. That is how denial works. The dollar downfall begins not necessarily with a crash, but with erosion. And war makes that erosion faster, uglier, and more expensive. It raises oil, fuels inflation, and strains debt. And it exposes whether dollar strength is real or just theater people got used to believing. So no, too much idle cash is not safety, It is exposure dressed up as comfort, and comfort is exactly how people get trapped. That is why wise investors do not hold too much cash. They move into hard assets that have stronger history of preserving purchasing power when currencies weaken, such as gold, property, and land. If you think crypto is the answer, click here. If you want to know why I trust gold today, click here. If you want simple, honest conversations about money, like and subscribe. I will see you in the next one.